Yeah, Tuesday. What's up, everybody? Tuesday morning, May the 19th. Hope everybody's having an amazing day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so that you can get the alerts and the updates whenever we do the new daily market commentary. So what we're looking at for today is an S&P that is staying a little bit flat after a huge rally that we had yesterday. So hopefully those of you that watch our DMC on a regular basis were able to catch some of the ES move. And our question today yesterday was, do you trade on Sunday night? Because Sunday night was really when you set up for the big breakout that we got yesterday. And if you were in it on Sunday night, you were able to participate and play around in that kind of a market. And if you were not, then yesterday we got a little bit of a chop, which we'll talk about and cover a little bit later today. So let's go ahead and dive in, starting with the ES. Now, in the ES, you can see that we have a supply level up here. But this supply level up here, if we look at the 4-hour chart, was definitely part of the fact that we were in this bigger picture upward trend, which makes this more of a confirmation entry. This is a very quality level. So if you did take this short and get stopped out on a limit entry, then I think it's a worthwhile little stop out because it's a fairly small level. And it was range bound. If you switch to a confirmation entry, which is what the trend told you is probably the smarter thing to do, then you weren't in this trade in the first place. Now, for most of the people that I spoke with, they were long from our breakout trade on Sunday night right in here and used this as a profit target, which means I miss out on a little bit of this movement afterwards if you were using this supply area as your profit target. So now, what do I want to look at? Well, looking at my 4-hour, we're still kind of in this 4-hour range that we've been for a while, and that's this range right in here that we've been chopping around back and forth. I would be interested to see if we pull back, and if we pull back to only halfway. Now, what I'm looking at specifically is this fair price value area kind of control line, and I'm just going to draw a line right through the middle here, and I'm going to do something with this line here. Let's make this very thick and super obvious. We're going to do we'll do black. All right, so looking at this big black line that's running through the middle here, support, resistance, resistance, support, resistance, support, resistance, resistance. You can see that this line has been a magnet for price, and price tends to want to come back to this region, right? So when I look at this on the hourly chart, taking that 4-hour picture into account, let me remove this box here, and let's look at this area here as the place for price to return. Now, I think that looking at our hourly demand levels, we've got a couple of decent levels, specifically this one here, before the origin of this very strong move, and I have this level right in here. Now, one of the things that's important to consider, let me get rid of this black line, is that from a pure level standpoint, I have this little bit of sideways and this little bit of sideways before a very strong move up, right? So this is two areas of imbalance stacked on top of one another. So this would be an instance where I think it makes sense to actually combine both levels into one wider zone. Now, that zone's fairly wide. That's a pretty wide area. If you are just trading the ES contract, it may require you to move down into a mini contract. But that, to me, is a really high probability area and probably more for like a swing trade than an intraday trade, because we're going back to the 4-hour to identify where that turn point would be. And this, I think, when we come back into here, could be a really nice area for a reversal. So keep an eye on that one. Probably in the next couple of days to see if we make it into that region. Now, what if you say, well, Chuck, how do I make money on the way down to that region, right? Because there's 50 points between where we are now and price getting down to that region. I would need some quality basing first before I would look for any breakdown of that kind of a level. I think that's the way to consider it. Let's move over and take a look at the Nasdaq. And in the Nasdaq, we did have a potential extra breakout level here yesterday, which I had talked about. And price gave us that opportunity for the breakout, but 1, 2, 3, 4, 5, 6 candles later, we were sitting at about a break-even level. So the market basically said, hey, listen, I just don't feel like we're going to follow through on this thing. Now, looking at it, we may have an opportunity for a short breakdown below here. My fear, though, is that this would be a bit of a bear trap, and it would trap a lot of those bearish investors that are looking to get short because you have some decent demand down below. And that demand down below could work as a stall point. So the Nasdaq really has been our strongest market and probably not the one to look to short when you're getting into these things. Now, going back a bit further on the hourly chart, we do have this gap fill area right here that we've come up to. And then if you really zoom in, there's a little wick over wick just above that gap fill area that we're coming back to, which is acting as a bit of a supply area. But I don't anticipate us really turning much there. Our 4-hour trend looks to be strong enough to continue to go higher. In looking at this, we do have a little bit of a reversal pattern on the 4-hour candlestick chart. And so once again, if you're looking at a potential for a short, this might be a decent little setup on a breakdown. The other idea to look at, and while I probably have some older lines on here, is to look at the Russell as a potential for a breakdown, because the Russell is our weaker of the markets. That if you're going to look short is the better one, and unfortunately this one just barely missed getting into this reversal area yesterday, this is one of them that we cover in the live trade rooms, but it did not quite make it there, so that would switch that to a confirmation entry. All right, move over to crude oil. So in crude, we're looking at the September contract still. If your broker allows you to trade the July contract, then more power to you, phenomenal. But I think a lot of people's brokers are not, and so we've been using the September. So in analyzing this September contract, we have this area of demand right here, which was formed at the European market open, right? So formed at the European market open is my favorite time of day to look for levels, essentially. Got a pretty nice move away. The downside is that we've also based in front of it a couple of times, right? And so I've got this level in here as a potential. If we base anywhere inside of this region, then I cannot take this level. I have to let price break through there. If we base inside of this level, it actually sets up for a breakdown to come down to this 31 region. So that's where I would look as a potential. Now, if we come straight down into here, that's where I think you'd get the reversal in price to move higher. Remember, basing before a level is what we consider the kiss of death. Next, looking at gold. So gold surprised me yesterday. We had a potential breakout area here. Didn't quite get the full breakout opportunity. And then price came back down into what I thought would be a quality demand area, and then just blew right through that. So that one was a little bit of a surprise, as I thought that would hold. Now, remembering that the weakness of this level was the time of day that it was formed, right? And that's what we talked about yesterday, is that this is a level that was formed on the Sunday open, and that Sunday evening open had a little bit of weakness to it. Now, we did come back into this wick over wick area here above the pivot. We came really close to it and almost got filled, and we just touched it in the overnight and kind of moved away. 1, 2, 3, 4, 5, 6 candles later, we haven't really started to move the direction we'd want to. So if you got into this long, I would take either some money off the table, and if you take the money off the table, you can pull off about 4 or 5 points, or I would just move your stop to break even, because I feel like you're getting some weakness there. Now, on the 4-hour trend, our 4-hour trend is still up. That has not changed, and we would look at a better opportunity as it would be if I get some quality basing to get long, maybe even above this region in here. So for now, I'm going to remove this level. And then if I'm looking for demand, I would have to look for demand a bit lower, but this area here isn't the greatest, right? It's not the greatest because of the fact that we're basing in front of it. And that's the same kind of the same picture we looked at on the hourly chart. So for now, that upside breakout's all I've got lined up. All right, moving over to bonds and currencies. And we finally got some movement yesterday in our currency markets. Our ZN, which is our 10-year note, we based in front of the level, which took that level and made it invalid. And then our breakout trade, we didn't base in front of it, which makes it invalid. So this is why we talk so much about understanding the rules, right? Why we really stress a rules-based system. And that rules-based system is not designed to get us into trades. It's designed to keep us out of trades. And that's what people tend to forget, is that I'm not looking for reasons to get in. I'm looking for reasons to stay out of good trades. I don't want to, I guess it's better to say I look for reasons to stay out of bad trades, but I don't want to look for reasons why I should get into a trade. I want to look for reasons why I should not get in. And that's exactly what our trade optimization plan does. So if you are a Traders Army member, underneath community, my downloads, you will see that we have our trade operation plan. This is the trade operation plan for breakout trades, as well as the trade operation plan for reversal trades. And that's why we score all of our trades to follow our rules. So that's available on the Traders Army website if you are a member. And that's what would tell me, okay, this one's no good, and neither is this one, and to keep me out of both of those setups when the market is not providing for us. Now, let's take a look at what it is providing in the future. Well, if I look at those upper areas here, we've got a wick, and a wick. If I get basing immediately in front of the level, and when I say immediately in front of the level, I mean somewhere in this region here. If I get basing immediately before the level, now this is where I can see a potential breakout to the upside with room to run up to this region, probably somewhere right in here. All right, next, looking at the Aussie. So we were looking at the Aussie yesterday, and when we were looking at it in the morning, it was right about here, and we had a potential breakdown if we got basing right in this region. Well, the Aussie just laughed at us and continued to rally higher, which on a 4-hour chart doesn't really change our sideways price action. And so if we get a bit of a pullback, we may, however, have a decent entry criteria somewhere down in this region. Looking at the 15-minute chart, that entry criteria might be best right around the open from yesterday, which is about a 50% retracement of that bigger move. Now, this is a 15-minute chart, so it needs to be on a purple line because we know that our probabilities are always a bit lower on that smaller time frame. Next, the euro. So the euro did rally up just about to our area of supply, and this was based off this little gap fill level, and we came really close to it and didn't get in. So that needs to be a confirmation style entry if we want to continue with it. And then looking at yesterday's big movement right there at the open, that would be where our level is on some sort of a retracement. We may come back into this region here, but this was formed at a really rough time of the day, so I'm going to come back to the U.S. Open as a better area. Canadian dollar, similar, very, very similar picture, where we had a pretty strong rally higher. We are sitting right below what could be a decent breakout move below here as well if we get one more pullback and then some basing. All right, Great British Pound and Japanese Yen would be our last two markets. So looking at the pound, we had a breakdown in the pound, which worked out really, really well for a lot of people who took the breakdown. We then had set up a gap and go trade, and it gapped and went the other way. But that's okay because it didn't get me into the wrong position, and we've now built a little bit of a base here for some bullish price movement, right? We may have a bit of a base for bullish price movement. That swing high, I've got a higher swing high right in here. I don't officially have a higher swing low as of yet, but if we want to kind of preempt the potential for a higher swing low, then we can look into this region right in here in the overnight as a potential reversal. I actually like this little wick over wick right here, which is right at the middle. as a slightly better region. Right down below all of this noise, I think this one might be a bit too obvious, and I'd want to see a better arrival into this zone here. Japanese yen, we did get a nice little move off of our 1 hour chart. We moved a little over 2 to 1, maybe 3 to 1 off of that level. So hopefully we were able to catch that one yesterday for a nice little run higher. And then we came back to it the second time and completely sold off. So the trade level worked out pretty well. On our 4 hour, it's telling me, okay, I've put in what almost looks like a head and shoulders pattern. It's not a completely clean head and shoulders pattern, but looking at the hourly time period, I don't know when, but we got this little wick over wick right here from price just happening where we may see a bit of a reversal. So there's our levels for today. If you have any questions, as always, send us an email, support@tradersarmy.com. I appreciate all that y'all do, and I will talk to you soon. See ya.